This morning's up gap, as you can see right here at 522, this up gap that has been sustained. This up gap was not filled this morning here. That's gonna be the key going forward. As you can see, as I talked about in the last analysis on my 65-minute chart here on Tuesday, that bears have gathered a lot of weapons with the down gaps, right? So as you can see, there's all-time high down gap at 560. There's another down gap at 537. And there was another bigger down gap that happened on Friday morning here. So as the bears gather these weapons, bulls were seemingly not able to find any kind of traction, though bulls were trying to gap up almost every single sessions in the last several days here. As you can see, this is the Tuesday gap up. That's Wednesday gap up yesterday, which it fell through. And this is this morning's gap up this Thursday today, this morning. But what happened was, though, it's interesting to note that there was slightly a gap up from Tuesday morning here. As you can see, this is where we closed on Monday. This is where we opened Tuesday morning. You see that lower wick here? The gap wasn't fully filled, and that's why I've annotated that with this little box. Slightly blue, a gray bluish box right here. And so that we know that there's a slight up gap that remains. And yesterday what happened was, you see there's a shenanigan up gap, right? It looked like after this long bearish last hour fade, you would think that we're going to see a continuation. That's probably what most bears were hoping for. But we gapped up in the first thing in the morning, and then we threw a couple shooting stars, and third hour, fourth hour, fifth hour, sixth hour, we fell. We fell back down to Tuesday morning's up gap, but as you can see, that gap was not filled. And this morning, buyers gapped it up one more time. Bears trying to fill it on the first hour. They failed. About 65% of that up gap from this morning was sustained. It was never filled. And as you can see, it propped itself up on the first hour, second and third, right on the short term. We broke above the short term on the fourth hour, and we pretty much hung around here on the fourth, on the fifth, and the sixth. But do you guys remember what I just said about the little tiny up gap that was never filled, which we gave problems for the sellers, right? Remember, I just talked about this right here. This up gap from Tuesday was never filled. Bears came back down to it yesterday morning. It was still not filled. And then bulls made its another upside move. Let's be fair with the bears here as well, because you can see there's a down gap. And this is from Monday morning, right? That's a Monday morning gap down. And you see how we got up on Tuesday and Wednesday. You can see the gap is not fully filled, right? Because that's where we closed on Friday night, and that's where we open. So gap starts on top of this Friday night's candle, 6th hour on Friday night, 6th hour candle, right? And that gap still remaining at 533. Remember, when the gap was not fully filled yesterday, right? What happened? Market rolled over here. Today, once again, that gap, that 533 down gap, because it gapped down, is still remaining. So going into tomorrow, despite the fact that you might look at this oscillator as possibly a bullish signal, because oscillator just crossed back up. right? So we've sustained the up gap from this morning. We're above the micro and short term as of close, and the oscillator crossed back up in the middle of its band, which is very similar to here. And as you can see, that at that time when we did bulls made that move, there was a midterm which it acted as resistance, and market rolled over. Right now, midterm is currently traveling at 541. So what we're really dealing with here, obviously not only the midterm that he needs to reclaim to fully reverse this downtrend, but we're currently dealing with this down gap right here. Because with that oscillator crossing up, it is favoring the buyers going into tomorrow in a conventional means, but with this down gap that was not filled. Because remember, on this day, it looked bearish, didn't it? You guys remember? Like, this is what it looked like. You see what I'm saying? This was yesterday. Yesterday, that's what it looked like. Look at this thing. We see drop, fades down, fill the up gap, gets below all the moving averages. And look at that oscillator crosses down. Everything looks bearish. But what happened this morning? We gapped up and the oscillator crosses back up. It all happened because of this up gap was never filled. This is the same scenario. So here's what I'm going to suggest for the buyers. Buyers, best case scenario, we gap it over, right? And hold it above it and turn it into an island up gap, right? And then bulls then going to have, you know, some more traction, momentum power to battle with this 543 down gap and the midterm moving average coming down here. That would be the best case scenario, but what the bulls must do early in the morning is to get up and fill it completely. Whatever the remaining, fill it. If not, if this down gap doesn't get filled, I would suspect to see some very abrupt sell-off going into it, and that oscillator possibly whipsawing back down.